So I have my whiteboard on right now. If you can't see it, just do say. If you can see it also, you can also tell me. So let's talk about leverage, right? Like I try to find like the best analogies for this thing so that people can get it, and real life examples, so that people can understand what we're talking about here. Okay, so what it is you're gonna have one example is you're gonna have a real life situation where you want a nice expensive this is an expensive house, by the way. So a nice expensive house, okay. And then let's say you want this house, but then you don't have, like, let's say this house is valued at about 200,000 rands, okay. So 200,000 rands. In fact, let us use dollars because uh, we are working with international people here. So let's say this house costs you about $200,000. Okay, so it's gonna be 200,000 uh dollars. Okay, so now this house is valued at $200,000, and then but you don't have the whole $200,000. What happens is the bank will say to you, well, it's fine, you can get this house, you can give us a down payment of, like, let's say $50,000. Okay, $50,000, right? Now but a whatever happens to this property of yours, you still have to pay us $200,000. That if you are selling the house, or if you have to sell the house, you still need to pay us $200,000. Okay, so the bank is saying, it's fine, you can give us 50,000, right? I mean dollars, but this remains there. So whatever happens to your property, let's say the market goes down, unfortunately, and then you have to, like, let's say this house in about in a year it's worth 150. It goes down in value and it's worth 150,000 dollars, but then you want to sell it, right? If you sell this house at this price, right, you will have to, you will get 150,000 dollars, but you will still owe the bank $200,000, which means you'll make a loss of 50,000 dollars. Okay, makes sense, right? If it goes up in value, which is good for you, that means that you will be able to, uh, let's say it goes up and it's worth in about a year, it's just an example, good people, it is worth 250. In that way, you'll have to pay the bank the 200,000, and then you'll have a profit of 50,000 dollars. Okay, so what is happening here with the bank is they are leveraging you, right? This is leverage. You are able to buy a house. They are giving you buying power, let me call it buying power, of a $200,000 on your $50,000. So they are telling you that you can get this house at a down payment of about $50,000. Okay, so that is leverage. They are leveraging you. They are giving you that leverage because now you have more buying power of more than what you could have bought without the leverage, right? That is leverage, good people. So let's go to uh, as you saw how leverage was able to actually um, um, help you, and also it was also able to destroy you in a way, because now you will have lost $50,000 if, let's say, the house goes down by it goes down in value to 150,000, then you'll have lost $50,000. And remember, initially that's all you had initially, so it's a lot of loss. Okay, so That's all there is to leverage in a simpler real life example. For those who actually buy houses or something, then they will know about this. This is leverage. The easiest way, I try to find the easiest analogy to actually explain leverage. Let's get to Forex in a very simple example. Okay. Now, what happens in Forex is the same thing, but I want you to get it as it is. Okay. Now, our favorite currency, of course. Uh, remember we spoke about currency pairs, right? We spoke about currency pairs, so you must understand what I'm talking about here. So let's say now, take it as a real life example. Okay, you are going to Europe, right? You're going to Europe. No, no, no. Oh, actually, that's okay. You're going to Europe. You are from the United States, or maybe you are just going to Europe. Né? You are from wherever, but you have dollars, right? You have dollars with you, so you are going to Europe, right? Okay. What happens is, you tell them, hey, I want a let's say $1,000. I mean, sorry, 1,000 euros. Sorry for that. 1,000 euros, right? Okay. Actually, you are in Europe now. You want to spend euros, okay? So you're gonna tell them, hey, I'm here. I want 1,000 euros. I don't know how you write the euros. Let's just put this as an E. You're in Europe. You tell them I want 1,000 euros, right? And when you get there, they will tell you that, okay, but you are bringing us dollars, right? So let's check what is the price. What is the value of Euro USD at that moment that you are actually doing that, right? So what is that value? And then from there, let's see. I don't really who can check the market right now and just comment the value of Euro USD now. If you can, just do that. Okay, it's fine. I have it. 1.16760. Okay, so now they're gonna check. Okay, 1.1676. This is the value of this is how the conversion is going to work, right? So they're gonna tell you, okay, you're going to need 1,100 $167 to actually get your 1,000 euros, right? That's it. They're going to say, oh, this is what you're gonna need. Okay. Now assume the they I'm talking about. I keep saying they assume that they is a broker. Again, we want to take this real life example straight to our trading scenarios, right? They is a broker now. Okay. Now your broker is saying, you are telling the broker, I want to buy 1,000 euros. I have dollars. Then the broker is telling you this is gonna cost you 1,000. Where did I put it? Well, yeah, $1,107. Okay, that's your broker, right? It's telling you that, right? So you're gonna have to give the broker this much to actually get this much of euros, right? So what happens is, on the case of leverage, when we say this whole thing is leveraged, now the broker will leverage your account, and then they'll tell you, okay, for you to get this much of euros, right? We will now, let's come back to leverage. I did introduce how the leverage looks. Let's say you are on a 1:100 account. So they will say, okay, fine. You will only need, and then they will divide whatever that amount is. So you will only need divide that thing with hundreds. That's quite. But you divide whatever you have by hundreds. Let's say you get $11. And then they're gonna say, you don't have to give me sorry, you don't have to give me this amount. Okay, just give me this amount. That's leverage right there, because now they are leveraging you. You're gonna have control over a much bigger or rather you're gonna have more buying power than you will have had without leverage. Okay, so it can go against you, it can be in your favor as well, right? So the broker is gonna say, well, you're gonna need 11 dollars to get this much euros, right? That is leverage, good people, because now you only had to get 1,000 times less in order to, I mean, 100 times less in order to actually do the same, make the same effect. Okay, that should make sense. Now let's go a bit deeper into this case. Let's go a bit deeper into this. So what happens is now for a beginner, leverage for a beginner, if you are really like, if this is like one of your first how can I put this? If you're about to open your one, like your first account or something, this is really important. Okay, even if you've been trading, a lot of people still don't get this thing. So I will break. I really want to break this thing down. I really want to break this thing down. Now let's look at this. Now the broker will offer you different options, right? Let's say you are trying to open a trading account, right? So they're gonna offer you a different options. So for example, they're gonna give you like leverage. I'm gonna show you on my broker exactly what I'm talking about. You're gonna have options, a lot of options. One is to 50, one is to 100, which means that for every $1 that you give, you are gonna be able to control $50 of the market. For every, if the leverage is 1 is to 100, for every $1 you are controlling $100 of the market. Okay, and then let's say 1 is to, a lot of brokers like to offer up to 1 is to 500, which this means that for every $1 you are controlling $500 of the market. Okay, now for a beginner, it's really important. Even if you're not a beginner, it's really important that you understand this, because people will just open leverage 1 is to 500. 1 is to 500, by the way, is a lot. That's a very high leverage. Okay, you are already setting up yourself for losses. Okay, it's very high leverage. I only suggest high leverages if you are trading fundamental news, like news, actually events, because you are just risking all the, like your whole account usually, because we don't usually put a stop loss. And in that case, you can just use 1 is to 1,000 if your broker offers that, or the maximum 1 is to 500. If you are coming in, you can use the smallest leverages. Okay, just so you can understand everything. And also, even if you are an expert, you still need to use lower leverages. Okay, it is usually, it's more of a trap than it is actually of benefit. Okay, so now what happens is on a 1 is to a 1 leverage account, this means that you are not leveraged. Okay, there is no leverage. All right, whatever you make, like there's no help, there is no multiplication, there's no leverage. That's what I mean. Okay, so on a 1 is to 1 account, that means that there is no leverage if you are opening a a thingy, a what you call an account. Okay, so now let's get to something really important. Now I hope that you understand this part where I say if you are having, let's say on your account you have a 100 USD. If your account is 1 is to 50, that means that you are in control of how much. You are in control of how much you multiply by the 50. You are in control of 50. Wait, is it 50 or 5 or 5,000? Sorry, $5,000. Okay, that's what it means, right? You are in control of $5,000. Now it's different the way they calculate. Okay, that's if you're using the whole 100 USD on the trades, right? Because usually, I'm gonna show you on everything, but usually on the phone and everything, you're gonna see something like margin. I'm gonna explain all of those terms so that you see. Okay, so now this will depend on your open trades. Usually, that's when I'm talking about margin, but we'll get there. Now let me show you on a broker. Now let's talk about the broker. Now I use it's not a lot of brokers. I've been with them for like a really long time, like a really long time, because usually I don't trust brokers, especially my from my country. They're really bad. So if I get a good broker, I just stick to that broker and I'm okay. Okay. So let me share this broker is really good for beginners, right? This is IC Market. This is my account. I don't usually trade with them a lot since I do a lot of Nasdaq 1530 and so on, and fundamentals a lot. But this is a really good broker. Okay, it's a really good broker. Now I'm saying it's a really good broker currently. Okay, if they do other things in the future, of course things change. Okay, so it won't be on me. I'm just like recommending them for now, what they're doing now. So what's happening here? When you open an account, right, you're gonna choose what leverage are you going to use for that account. Now that you know what leverage means, okay, now that you know what it means, you will understand what it's going to do to the effects, okay, of leverage in your account. This is a standard account, okay. And then I'll show you also on this standard accounting. I'll show you what it means. I'll show you just now. And then currency, you choose your currency. It doesn't usually matter that much because they're gonna convert accordingly. Even if you're using rands or whatever, it does not matter what you are using. But actually, it does in a way. But I won't explain that for now. It does in a way because if you can deposit you see that these values change even if you're not trading. But if that amount, if dollars, if the dollar gains strength against the rand, you know, you're gonna have a bit more than you initially, like it's gonna have more value. But you don't have to confuse yourself with that. The balance, your free margin. Okay, now let's look at this one. At least it has some form of free margin because no trades are open. Then it will be like the balance will be the same as my free margin. Okay, but I'll explain that as well. Don't worry about it. Now let's see if we open an account. This is IC Markets. Let me go and open an account on a different broker. I want you to understand it's the same thing everywhere. Leverage, balance, everything is the same everywhere. Okay, so I'll go do it on a different broker so you get it as well. Now let's use my other broker. These are the brokers I recommend if you are trading currencies, Nasdaq and all those things. These are the two brokers. I'll share the links as well for you to actually open an account. Okay. I hope you can see my screen right now. It's JustForex. So on JustForex, you open it. If you click open an account, okay, this is what you're going to see, right? This is what you're going to see. So you have options. A pro account, you are not a pro. You are not a pro. You are a beginner, okay? A standard account, there you can see it. A raw spread account, I'll explain them as well. Generally, on every broker, you're going to see the same things, okay? A raw spread account. On a raw spread account, you see the spread is zero, okay? Is zero. The spread is zero. I'm going to explain the spread. Remember, I have to talk about the spread as well. The spread is zero. It means usually this is typical for trading fundamentals because they won't change the spread a lot. Okay, so when you're trading news during events, spreads will change drastically. So if you want to like properly trade those events, you're gonna have to do that. But a raw spread account, usually they're gonna charge you commission. Okay, they're gonna charge you commission instead of a spread. Okay, but I'm still gonna explain what a spread is so that you understand. It also has like some restrictions as well. A standard account is usually the one I recommend if you are coming up a standard account. The leverage here 3,000. Okay, that's the maximum I believe they can give you. That's just 1:3,000. That's the thing we spoke about. 1:3,000. Okay, so that's the maximum. It can go low. So let's open pro account as well. As you can see, spreads from 0.1 blah blah blah. Commission, no. This one is going to have commission, as you can see they saying here. Okay, now let's open a what you call let's see, a standard account. Okay, open account. We won't make it a real account because I want to show you how the money behaves inside. So we will open a demo and then put in demo money. Okay, now let's try demo. What's happening now? Okay, still loading. All right. Okay, so now here you choose your leverage. Okay, you choose your leverage. All right, so let's see. I want my pen here. Where's my pen? Your currency, okay? We'll keep it USD, okay? And then leverage. This is the important part that you're talking about. Let's see. Let's do this. You see, there are many options, right? 1:1 means there is no leverage, okay? No multiplication. 1:2, you will you now understand what is happening here, okay? 1:100, and so on and so on. So let's open 1:100, okay? 1:100. Trading password. I'll just enter a password. Simple password. Now let me do it like this. Okay, I hope I can remember the balance. Let's keep it 100. Okay, let's keep it at 1,000 US dollars, the balance. Okay, create the account. Now, after creating the account, you are going to be given the details and whatever. This is the one we opened, the demo we opened yesterday, but I started afresh because we had to I had to show you guys everything. Okay, they've emailed me. They sent me an email. They've emailed me the whole details that I'm supposed to use. Okay, the password is the same one that I just entered in front of you guys. Okay, let's go back to the whiteboard. Now I check my email. I'm gonna see. Oh, okay, this is these are the details. I'm just doing that right now, and then okay. All right, so let's I'm just logging in. I'm gonna log in with my phone, and then we are gonna transfer to the phone. Okay, we're gonna go back to my phone. Account information. Did they just take up my leverage? All right, big. Just give me a few seconds while I'm still punching in the stuff there. All right. I think I forgot to show you something. You also choose. You don't have. I don't have to show you, but you also choose if you are making it MetaTrader 4, MT4, or MT5. Okay, MT4 or MT5. Yeah, that's your choice. And then it doesn't really matter much. It's gonna be the same numbers that you see, so they won't change anything just because you are using MT4. You go to your phone, new account. You'll see a lot of details there. They'll tell you everything. Okay. Now, password. Okay, let's use any ODCAD. Okay, so ODCAD. I'll open the chart today. So we will look at ODCAD. I'm gonna open a few trades just to show the terms on the other side. I'll show you just now. Let's buy it. We didn't analyze or whatever. We are just it's an example, good people. So we didn't do any analysis. Okay, we just bought it. Okay, now let's check what's happening this side, right? You have balance there at the top. Okay, balance is how much you started, like the amount you put in your account. You remember I said we are putting in 1,000 USD, and then equity. Your equity is gonna be your balance plus your profits. So my profits are negative, so which means it's gonna be, we're gonna subtract. That's why it's less than my balance, right? If I was in profits, it was gonna be more than my balance. Okay, and then let's look at margin. Margin is how much control I have. It's the leverage. Okay, they are showing you the leverage there. So my margin there is $14 for just these two trades that I opened. Okay, that's going to be a total of $14.29. I hope you can see the number there. And then free margin, we are talking about the amount left that you can still trade. Okay, remember we had the balance before entering trades. That was $1,000. After entering trades, we are now left with free margin of 988. It's moving, but 980 and 86 is gonna keep changing because they took my balance, subtracted margin. So you say balance minus your margin, you get your free margin. Okay, I hope that no, not balance, sorry, your equity minus your margin. Okay, and then you get your free margin. That's the amount left to trade at the moment. Your margin level is measuring the health of your account. How healthy is your account? Okay, how they calculate the margin level? It's a percentage, as you can see. They're gonna say equity divided by your margin times 100. Okay, that's that. They're just showing you how healthy your account is. Okay. What's happening? What's happening? Okay, let's go back. That's it. Okay, that's it. So now there's something I want to show you. Let's close these trades because with like there's no particular analysis done or whatever. We are in profits. It's just
Please,
luck. Okay,
Bro
now
Leslie.
let's look at wait, let me quickly check this.
Hello.
Yes.
The logo Intelligent Traders is hiding everything, so I can't see exactly what you are saying.
Oh, okay. Let me. I'll get to. I'll get to it now and fix it. You can see, ne?
Yeah, the screen. This one I can see it well.
Proper.
But when it
Oh,
comes to margins and all those things, it is hiding before behind the logo.
ish, okay, it's fine. So I hope my laptop was able to record that so that you can see it on the video. If it wasn't, I'll just do it again.
Okay.
Anyways, if you open the trade, you click there. You say, you see, you have an option to choose there. That 0.2 is your position size. Okay, how much are you buying, right? So if I can edit that, I can make it 0.01. That is called a micro lot, and then 0.1 is a mini lot, and then a lot is gonna be just one. Okay, it's gonna be one. Okay, now for a micro lot, mini lot, and everything, it's just the volume. How much are you buying and everything like that. That's what you're setting up there. So I click buy. I'm in a buy position, right? But this is instant. It does not show my what you call where I can set the stop loss. Okay, so now I want to quickly talk about the spread, but it's not showing. That's my problem. I'm not sure if this account is okay. Let me just get it to it anyways. A spread is how the broker pays themselves. Okay, it's how they pay themselves. So it's the reason why if I enter a buy right now, you see the market is on that green zone. It's on that green line, but my buy position was placed up there, as you can see up there. That's the spread. That's the difference, right? That's how the broker that's how they pay themselves in these things. They use the spread. So what happens here is if we're on each and every currency pair, you're gonna get two values on your left and on your right. Okay. Now the value on your left is equivalent to your what do they call this thing? Um, because the lower one is gonna be then the upper one, or it's gonna be your buy. So the one that is there's bigger one, as you can see on your left, you have bigger values. Sorry, let me show my screen again. This thing is having problems. On your left, you are seeing. On your right, you are seeing bigger values. On your left, you are seeing smaller values, right? So what that means is oh, this can't be good. Okay. So what it means is that on your right, this is the price you're gonna be buying at. On your left, this is the price you're gonna be selling at if you are selling. You understand? So the broker will shift it a bit so that they get paid as well. They're gonna take the difference, and that's gonna be their payment. That's the spread. It's the reason why at times you're gonna your stop loss is hit. I mean, it's not hit, but you are removed from the trades, or your take profit is not hit. I mean, is hit, but you are still in the trade, right? I remember I posted an Instagram video where my take profit was hit, yet it didn't close immediately. It still had to move the whole spread first, and then it will close. So that's it. Now, that's about it, good people. I believe that's about it. I just tried to squeeze it in within in less than an hour so that you guys don't sleep. Okay. And I don't see questions to answer my. Oh, okay. Now don't worry. I still got you. I see the question. I don't see any questions on the chat box. I'm not sure if I should assume you guys get it or what. Okay. Okay. So I'll have to assume that you guys understand. I hope this class was actually helpful in a way. Okay. You guys have a good night. On over trading, that's gonna be on the next class where we are looking at risk management and everything. But I partially answered your question because uh, we looked at what you call this thing, uh, understanding how much leverage is affecting your account, because that's also gonna be a thing that's gonna be like you will overtrade if you don't understand leverage, if you put a lot of leverage. So I partially answered you. When we get to risk management, stop losses, putting your take profits, risk to reward ratios, I am going to explain that. We are slowly building it up. Just make sure that you understand what we spoke about today, the leverage, especially real life examples. Just understand that, and then we're gonna get to your your risk management. Then from there, we might just be heading for the more advanced stuff, and then also invite some other mentors to explain those things to you, and how they approach the whole thing, and also their life stories and everything. But for now, just focus and just make sure that you get this whole thing. Let me see. I think tomorrow we're gonna have a class, but I'll update everyone on this. Next class is really important. Risk management, how to um, risk to reward, and it's gonna fully answer your question. Over trading. How do you even overtrade? You're gonna get the your emotions, everything. Okay, we're gonna get there eventually. All right. You guys have a good night if you're going to sleep. Bye bye.